Hi everyone, we are here today at the Emergence Investment Conference. I'm your host, and we have a very fantastic lineup of speakers. So, joining us today, one of my esteemed guests is Alex Retzlaff, the managing partner at Unify Ventures, and he's here to share his insights on family and office investment trends. Alex, thank you so much for joining me.
Pleasure. Yeah, thanks for having me.
Now, let's dive right in. So, with over 2 decades of experience in the startup ecosystem, you have witnessed various trends in family office investments. So, can you share some notable trends that you've observed recently, and how are they impacting the startup landscape?
Yeah, so look, obviously in the last couple of years, things have shifted a bit compared to the heights of 2021, and that's nothing new. What is nice to know is that it seems like about to the second half of next year, that's likely. Sorry, of this year, I meant to say that's likely to improve. That's when talking to others and so on. The expectation is that things will improve in terms of deployment of capital. So I guess what I'm trying to say is that a lot of family offices were holding capital for the last, say, year and a half, and so there is a bit of a change of wind now. I was talking, for example, with Sam from Rich Alternative Investments, and he was telling me that just in the last few months he had an incredible uplift in terms of capital raising and stuff like that. And they're very good with the outreach and marketing and things. So it's just nice to see, and I'm seeing more conversations that I'm having with founders and family offices and fund managers, and we experiencing similar things as well. So the winds are definitely changing, which is really nice to see. Ultimately, capital has to flow for the industry to benefit from that capital.
Yeah,
So
absolutely.
yeah.
Very well said, Alex. Now, given your unique perspective as both a founder and an investor, what advice would you offer to startups that are looking to attract investment from family offices?
Yeah, great question. So I think it's around alignment. So family offices have a more flexible mandate typically for investing. Not always, but typically, right? So if we think about, say, a VC fund, they'll have, they're often, in Australia at least, there's many thematics VC funds. And so if you don't fit within the thematic, then they're not likely to take you on, irrespective of how much they like your opportunity and the founder and the team and so on, right? So I think it's a case of alignment. And so it's easier, I think, to find alignment with family offices because the mandates tend to be more flexible. Having said that, some family offices will be quite thematic about their investments, so they'll do prop tech investing much more often than they do other, advanced manufacturing investments. And so researching, so what I say these days to founders is make your research broad, but then hone in to, and you make your outreach targeted. Yeah. So that's really important as well. A lot of businesses, even though founders might not want to hear this per se, but a lot of businesses almost shouldn't be funded, to say something, and it's hard to be, because it became so trendy, so expected that you should be raising capital to get to the next milestone and so on. Where the reality is that certainly venture capital, but also many family offices are looking for venture scale businesses. And there are many great businesses. You know what I mean? There shouldn't be an alignment between a great business and a business that should be raising capital. They're not one of the same thing. And I think that all too often, founders kind of don't really understand the distinction. They simply say, because they haven't hit revenue yet, that they should be funded. Well, I can tell you from my own experience. So I founded 8 businesses and exited 4. And many of those businesses, and they weren't all startups, by the way, but many of those businesses didn't need capital in reality. And even the startup the one that I did exited quite well personally and allowed me to start going into angel investing and then started backing funds. Even that business itself, I basically bootstrapped it on the back of convincing a corporate to come and basically fund the first $1 million worth of development of that technology. And what became very important in that case was keeping the IP, because I said to them, we'll get it right for you and your mine. And this is a mining technology company, and we get it right for your mine. But then I want to prioritize this technology, right? And so that was the arrangement. So I kept the IP. I focused on them for a year and a half to get it right for that particular mine and that particular client. And then I got in a co-founder that was, helped me with sales. And then we eventually got, VC capitals or angel investors and VCs and stuff like that. Does that make sense? But I didn't allow myself that capital became the thing, the way I couldn't launch this thing. Does that make sense? So think about other ways. And the other one is that there are many other sources of capital as well. So family office may or may not be. So back to your original question is research them well, try to find the alignment, be targeted with the outreach, be prepared, and make sure that before you spend, your own time and that the time of family officers and your target investor, that you should in fact be, raising capital in the first place.
Amazing. That is wonderful advice, Alex. Now, with your extensive experience in both founding and investing in startups, you have likely encountered various challenges along the way. So can you share a particularly memorable obstacle that you faced and how you overcame it, just for the audience?
Okay. So I mentioned earlier that I founded 8 businesses and I exited 4.
Yeah.
And it sounds wow, whatever. I don't know. You could derive a lot of I don't know, positive connotations. In practice, though, the reality is much more about resilience. Yeah, I think about that. So so I think it's a lot about for me. So a lot of mistakes were made, and I'll come to some examples soon. But what I would take from that probably is more a case of resilience. Yeah, which look, a lot of founders have abound. So I'm not saying that they lack resilience, but that's something that almost you can't do without. I would say that much. Okay, so examples of challenges. Well, I think that the challenge of, if you think about raising capital, then about so let's say a couple of % of startups actually ever raise capital. So that's an incredible statistic, and it's actually quite factual. Eventually, they might do, but certainly in the early stages, it's probably for a single-digit % of startups actually raise capital, right? So that's hence a challenge, and I suppose, and so looking for other sources of capital or for ways to bootstrap. And again, the example that I gave you earlier, which is working with a corporate instead of being bound by the fact that raising capital early is hard. What else? So challenges, around sort of co-founder dynamics. So spending plenty of time to getting to know a co-founder, and hopefully if it's over many years, if it's a multi-year relationship before you join forces and go into something together. I think that's really interesting. I think the number of sort of co-founders that don't pan out over the long term, certainly over the life of even a successful startup that goes for many decades, the number of co-founders that are not there for the long term is actually quite high, much higher. So that tells you that it's this kind of a bit of a theme of a challenge, right, out there. And so what I would say to that is, again, like I said, spend time to get to know them. Don't compromise for co-founders. So try not to compromise, and not compromise once you're together, but don't compromise before. Yeah, so take the time to find the right co-founder, which I don't. That's probably what comes to mind.
Amazing.
Yeah.
That's great, Alex. That's great advice. Now, looking ahead, what do you see as the unique advantages that family offices bring to the table as investors in early stage startups?
Yeah, I think it's related to the earlier flexibility that I mentioned in terms of their investment mandates.
Right.
So it's a combination of that, or if they are from a specific industry that the startup, is in, and so on, is the connections that they're likely to have. Yeah. So where if you compare them to venture capital funds that are basically custodians of other people's money, then they sometimes they need to be more systematic about what they do and so on. Not always, but sometimes they do. And I think that by comparison, so family offices have that flexibility, right? They often going to want to know, for example, early if you're needing more capital. So capital is a commodity at the end of the day. I know that it might be a scarce commodity, a scarce resource at times, but ultimately it's a commodity. So I think that all players in that space want to see how they can add value, and very much this applies to family offices. Okay, it could be a bridge round of capital. Yeah, it could be connections, it could be experience, and so on. Sometimes these family offices behave like pseudo angel investors at the same time, but with bigger checks, right? And so I think that that's
Amazing. That's very interesting, Alex. Now, before we wrap up our interview today, we are here at the Emergence Investment Conference, and it would be great for our audience to know, like, how's your experience been and any key takeaways that you have.
Oh, look, it's been great. The caliber of speakers and the people that I met even outside, sort of, I suppose, during the breaks and things like that. I've been coming to Emergence for a few years now, and the caliber just keeps on going up. So definitely continue to join the network. So Steve we've been interacting with me for many years, and so I've been sort of watching it for all that time and getting increasingly comfortable that it keeps on improving, keeps on getting better. So bring it on and join the force, because ultimately that's a startup community, right? And Steve is an incredible connector, and his team as well. So thank you. So his team and that sort of stuff as well. So really, it's a community effort. So join it. Yeah.
Amazing. Thank you so much, Alex. I have to say, this truly has been such a delightful conversation, and everything that you have shared for our viewers as well. This is valuable information. So thank you so much to our viewers for joining in. I look forward to seeing you all in my next interview. And thank you so much, Alex, for sharing your insights.
Pleasure.
Thank you.
Cheers.